This is the Sole Trader question 1 from 2017. Just to go through this Sole Trader question, the bottom part of the question is normal, has number notes. There's 10 of them here, and we're going to start with those 10 notes and then finish with the trading profit and loss and balance sheet. Note number 1 is quite simple here. It's short. We have closing stock is 76,500, but it includes stock which has been damaged. And the stock that had been damaged had cost 4,500 and is now worth 3,000. So basically this stock has dropped from 4,500 to 3,000 euro, which means it's lost 1,500 euro of its worth. So I just reduce closing stock by 1,500 by putting that on the credit side. I'm not going to finish this note because there's more in closing stock to come. Note 2. This is our regular note. There's a number of different entries we have to make to resolve this. We sold a van. We've sold the van. We have to calculate how long we've had the van for and whether we made a profit or loss on that van. So let's do that one first. So this is the van that we sold. It cost us 40,000. So that's my cost here. Now that van obviously was not worth 40,000 when we sold it, and the reason it's not worth that is because we bought it in 2012. We sold it in 2016. So what I've done here is I've added up the months for each of those corresponding years, and the months are shown there. Obviously you calculate it based on the information they give you. So if I was to find the depreciation on that van over the course of that many years, I'd have my 40,000 by the 15% depreciation, which they tell us here at cost, and I'm going to multiply it by 42 total months and divide it by 12. So I've essentially had it for 3.5 years. So I'm finding that's 1 year. I'm finding 3.5 years here, and it's 21,000. So that's the total depreciation. Now that obviously would be after reducing the value of the van. Now I received 18,000 for it, so I'm going to show the trade in here on the credit side. So it was worth 40,000, its value had dropped by 21,000, and I received 18,000 for it, which means that I essentially had a loss here of 1,000 euro. It was worth 40,000, the value had actually dropped 21,000 to 19,000. But you received 18 for it, so that's 1,000 euro. It's a selling and distribution expense. So that's the first part of that note done. Now because I sold a van and I bought a new van, I need to change my vans. So my van account here, my van at the beginning of the year was 150,000. So I've shown that here on the debit side of the van account, 150,000. I bought a new van which its cost was 48,000. Let's add that on the debit side. And I sold the van. Let's get rid of that on the credit side, 40,000. Which means at the end of the year I have vans of 158,000. Now you're after selling a van, and that means you have to take out the disposal depreciation. You also have depreciation for the year, so we have to calculate our depreciation now. Now from the start of the year, my vans cost 100, or the vans it cost is 150,000. I'm told that at the start of the year they're worth 85. So I know to get from 150 to 85, they had a whole lot of depreciation. The van, 150,000 was the beginning when we owned them first, and they've now their value is down to 85,000. So the van has essentially lost 65,000 euro worth of damage before this year. So that's accumulated depreciation. From that now I can look at getting rid of the depreciation for the van I sold, which we found up here to be 21,000. So let's put that on the debit side to take it out of the depreciation, and let's add in the depreciation for the year, which is my P&L. So how do I find depreciation for the year? I know depreciation is 15%, but for the first 3 months, because from the 1st of January to the end of March, my vans were worth 150,000. It was, as the question gave us, we just had vans of 150,000. So for those 3 months, the depreciation works out to be 5,625. That's only the first 3 months of the year. What about the remaining 9? So from the 1st of April to the end of the year, I would have had this van been sold, and this van is obviously van that I purchased. So for the remaining 9 months of the year, my vans are worth 158,000. So 158,000 by 15% by the remaining 9 over 12 months gives me 17,775. Two of those figures, this is the first 3 months, this is the last 9 months, they are the total depreciation figures. When I add them together, I find the total depreciation figure for the year, and that is a selling and distribution expense. So what have I done here? I've taken depreciation before the question, before we begin the question, the previous depreciation on the vans. I've added the depreciation for the year, and I've taken away the depreciation for the van I've sold, because that van is no longer in the business. I can get rid of its depreciation. And all I'm left to do here is balance both sides, and I have a balance brought down, a total depreciation for the balance sheet of 67,400. Technically it won't be a current liability, it'll be we'll take it away, it'll be in our fixed assets, total depreciation. The remaining part of that note is, and it's very, very consistent the way they word this, that the check for the new van was treated as trading stock. So it was treated as a purchase, and it shouldn't have been, because this isn't a purchase, this is just a new van that we bought. We didn't actually buy new stock. So in other words, I want to cancel that. I want to get it out of purchases. And to do that, I do it on the credit side. Now, how much was the check for the new van? Well, the new van cost 48,000, but I received an 18,000 euro trade-in discount, basically, an allowance. So in other words, I didn't pay that. So I actually paid 30,000. So the check was included in purchases, but I don't want it to be, so let's take it out, 30,000. There's more to come on purchases, so I'm not going to balance that account. That's the second note done. There's quite a bit in that. The third one here, again, another consistent note we regularly see is our suspense note, and the first part of that is basically correcting a mistake made with mortgage interest. So let's find out with mortgage interest what we were supposed to do. Mortgage interest we were told that we paid 2,400 for the first 3 months for mortgage interest. So I'm going to show that here as mortgage interest we paid, it reduced the amount that we owe. Now, that's an incorrect figure. We're told, as we see here, the mortgage interest is an incorrect figure. So what was the correct figure for the first 3 months? Well, my mortgage is 180,000. I would see that here. It's at 6%. And again, I'm just looking for the 3 months here because I know that's a mistake and I want to find the correct figure. The correct figure should have been 2,700, but we had only 2,400. So how do we fix that? Well, let's add our suspense figure to fix the mistake for 300 euro. So that 300 euro is going to fix that mistake. Now, that 300 euro is our suspense figure. And we've dealt with this, you would have dealt with this quite a bit before. Our suspense figure and our suspense mistakes have been included in insurance. In other words, the accounts haven't balanced, there's been a few mistakes, and they've just put the remaining balance into insurance in order to balance the accounts. So we need to fix this now. I need to switch up the insurance account. Now, my insurance is given here in the question at 17,700. I know that there was 300 here that wasn't included in mortgage interest. So I need to take out that 300 because I would have included it as a suspense figure. I would have included it here in insurance to balance the accounts instead of it going here. So how do I get it out of insurance? I put it on the other side. I take it out. So in other words, I'm going to add my 300 here, and because it's on the debit side of the mortgage interest, to correct this figure, I show it on the opposite side of the suspense account. In this case, suspense is insurance. Now, the remaining part of that note is on VAT. Remaining part of that note, we're asked here that there's been a VAT refund of 2,000 entered only into the bank account. So a VAT refund. So I was refunded VAT, which means my bank account will have gone up. So it'll be debit side in the bank account, and I'm going to show it here, credit side of the VAT account, and it was not included here, it was only included in bank. So obviously it would have been DR in the bank side. I'm going to show it here on the credit side of VAT. VAT was originally 6,400. I have 2,000 on the credit side, which means at the end of the year I have 4,400 current asset VAT at the end of the year. The 2,000 suspense was shown on the credit side here. Again, just like we did with mortgage interest, I'm going to show it on the opposite side of the suspense account. Up here, double entry, so it's on the debit side. So if I look at my insurance, which includes suspense, to get rid of the suspense now, this was the original figure for insurance, but it included the suspense. I want to get that out. So 300's on the credit side, 2,000's on the debit side, and at the end of the year I found my true figure for insurance was 19,400. That's an admin expense. Now I'm going to finish mortgage interest because sometimes they don't instruct us to do it later on, and you would be expected to find the remaining figures for mortgage interest. So we've only dealt with the first 3 months for how much was paid, but how much should we owe for mortgage interest for the year? Well, the mortgage itself was 180,000 at 6%, and we had it for a full year. So that works out to be expense of 10,800 for the year. That's our P&L expense. Now in a sole trader question, mortgage interest does not go into admin. It's not an admin expense, it goes at the bottom. It's a operating expense. So we'll look at that later on. That's why I've just, instead of showing admin or selling distribution, I've labeled it as I have here. Now that's the amount of mortgage interest we should have paid this year. We've paid 2,700, so we still have 8,100 that we owe, a current liability. So that's mortgage done. So we can move on down here now. Our next regular again is patents with investment income. So my investment income figure includes patents and it shouldn't. So let's look at my patents. My patents in the question here, if I can find it, is 68,000 and it includes mortgage interest. So the 68,000 here, and what I'm told is basically that mortgage interest for the first 4 months has been included. So let's find out how much that mortgage interest would have been. So mortgage interest up here, or sorry, investment income, I'm mixing my words up. Investment income, sorry, was included for 4 months. So 200,000 by 3% for the first 4 months. So we got the investment at the 1st of May. So for the next 4 months, it was 200,000 by 3% by 4/12. And I've shown that here, and I'll explain that in a second. I've shown that here. I've worked it out to be 2,000 euro. So basically, investment income has been included in patents, and I want to get rid of it because it shouldn't have been. So why am I putting it on the debit side? Well, this is investment income that we paid. So investment income that we paid would usually go, or investment income side that we received, because this is income, would usually go on the credit side of the investment income account. This is the amount that you would be due to receive the year. That's our income figure on the debit side of this account. And whenever we receive some of that, we'd cancel it here. Now, instead of showing it on the credit side of this account, they've showed it up here on the credit side of the patents. So this is why I show this here sometimes. I show it in a different color and I write it small writing and I draw lines through it, just so that I know it doesn't form part of the account. But it shows me what mistake they made. Now, they should have included it in investment income, but it was included in patents and it shouldn't be. So I'm going to show how it was shown without writing the figure in to include it in the accounts. It's just a brief little sketch for me, because I know if I want to cancel that, I need to show it on the opposite side. And that's why we have 2,000 on the debit side, to get rid of investment income from patents. So patents at the end of the year would have been 70,000 euro. So patents is 70,000 euro. We're told that we need to write it off over 5 years. So my P&L figure is the patent amortized. 70,000 divided by 5 years is 14,000. Now the remaining 70,000 divided by 5 multiplied by 4, if you want to write that here, would be the remaining months that are left. You don't have to write that, I'm just going to show it here. So it's 70,000, 5 years. I'm going to write 1 year off. The remaining 4 years are still left to be in my account at 56,000 euro is an intangible fixed asset. So that's the investment income taken out of patents. Well, what about the investment income itself? The investment income itself, as we had looked at earlier, was 200,000 euro. Now, 200,000 euro, and we took out the investment. We started the investment on the 1st of May. This is a little tricky. It's the 1st of May, so I actually had the investment for the full month of May. The only months I didn't have it for were January to April. So I had it for 8 months of the year. So in order to find how much money I should have received for my investment income, I do 200,000 by 3% by 8/12, because I had it for 8 months. So showing that here, my 200,000 3% by 8/12 gives me 4,000. That is a non-operating income, just like mortgage interest. The two of those are incomes and expenses that are not part of the operations of the business. So in sole traders, we show them at the bottom. This will not be included in operating income. It's a non-operating income figure. So that's how much I should have received. Now we're told we had received 4 months, and we calculated that already. So I should receive this, and I've received 2,000. So let's take that out on the credit side. How much am I left to receive? It's the remaining balance of 2,000. 4,000 is how much I should have got for the year. That's my income figure. This is how much I received already, and the remaining amount is how much I'm yet to receive. It's a current asset. So we've that note dealt with. Now we're told to deal with investment income and mortgage interest due, which we have dealt with already. Sometimes they don't tell you that. So I'd encourage students, the second you start, to open up this account to finish it, just in case you finish the question without finding how much investment income and mortgage interest is due at the end. Okay, a few more notes to go. This one is something we don't see as often, So a creditor was owed 7,600 and they accepted office equipment to settle the debt. The office equipment had a different value to it. Now, it had originally cost 11,000. It was only worth 6,500 now, so we know it's lost value. We know it had depreciated, and no entry was made at all in respect to this transaction. So how do we deal with that? Well, first of all, the creditor was owed 7,600 and they've accepted office equipment in full settlement. We do not owe this anymore. So at the start of the year, I owed my creditors, or at the start of the question, I owed my creditors 78,000. So 78,000 is how much I owed them. Now they accepted office equipment, so I do not owe this anymore. Now the amount of the debt that I've cancelled is 7,600. So the two of these add up to 7,600. I no longer owe that to the creditor. Now I've shown them separately, and the reason I've shown them separately is because technically we didn't pay them 7,600. We took our office equipment, which had a value of 6,500, and we paid them with that. However, that doesn't add up to the full value of the debt. So in other words, we paid them 6,500 in office equipment when we owed them 7,600. So we received a discount of 1,100. And I think it's important to distinguish between the two because you need to deal with these accounts separately. So that's how much I owed, and I don't owe this anymore. I'm not going to finish creditors because they come up in a later note. But now I know that there's two more accounts I need to deal with: office equipment and discount. So let's look at discount. Discount, given in the question, we have, and it's usually down at the bottom somewhere, it's down here. It's an income figure of discount of 3,200. So it's an income figure, it's the balance there. I'm going to show it on the same side of my discount account down here. And that's my discount figure. Now I received 1,100 euro, which is further income, further discount that I've received. So I'm going to increase the value of my discounts. It's net, again, it's on the debit side of the creditors, so it'll be on the credit side of the discount account. So to balance the discount, I know there's 4,300 here that is going to be a P&L income figure. Total discount received at the end of 4,300. So that's that dealt with. Now, just like we dealt with the van disposal, I'm going to want to deal with the office equipment disposal too. The office equipment that we sold was worth 11,000 euros. So it was worth 11,000, and we see that here. And it had a value of 6,500. So we know it's dropped value, and we know if an asset drops value, it's because of depreciation. That's its cost. And that's how much it was essentially. That's it, actually, its trade-in value. And that's why I've traded in brackets, because essentially we traded it to a creditor. So that's how much we would have received for it, essentially. So what was the difference? The difference is between how much it was worth when we sold it and how much it was worth at the start is the depreciation. So I've shown that here, and it's 4,500. Now this isn't going to go into an account, but we have to remember, if I'm calculating my office equipment for the balance sheet and I've sold office equipment, then this depreciation should no longer stay in the account. So this figure is going to be relevant very soon. Now they don't instruct you to in too much detail to deal with your office equipment, but because you've changed around something here for office equipment, we need to show that throughout the account. So office equipment at the start of the year was 25,000. I sold office equipment 11,000, so let's take that out, which means I'm left at the end of the year with 14,000 in office equipment. That's the cost side of it dealt with. Office equipment for depreciation had originally cost us 25,000, but we had a net book value of 15, which means it was total depreciation before the question started of 10,000 euro. That's shown there on the credit side because it's the liability balance at the beginning. Now, I sold office equipment. We've looked at this, which means that depreciation now needs to go. So I'm going to show it on the debit side. Again, double entry. It's going to go on the debit side here of the depreciation account to get rid of it from this 10,000 balance. And all I'm left to do at the end is find the depreciation for the year for office equipment. Office equipment held at the end of the year depreciation at 20%. So let's show that here. Office equipment end of the year was 14,000. Which we discovered here when we took out the guy that we sold. 20% of that is 2,800, which is an admin expense for the year. So at the end of the year, basically I had 10,000 at the start, another 2,800 for the year, and I'm going to take out this depreciation on the guy that I sold. So at the end, my balance sheet depreciation will be 8,300. It's note number 6 dealt with. So note number 7, this is our revaluation of buildings. So buildings at the beginning of the question, we can see up here were worth 680,000. That's their cost. Cost is 680. The value went up to 800,000. We're told the revaluation, the value went up to 800,000. So this is the beginning, and this is what will be shown in the balance sheet because this is the value of the 31st of the 12th. So in order to jump up that value, we have 120,000 that we would have increased our value by. That's revaluation reserve. That's that side of it dealt with. Now from the depreciation standpoint, we know if we revalue a building, we have to cancel the depreciation. So the buildings originally cost us 680, but they had a net book value of 595, which means there was depreciation before the question started already of 85,000 at the beginning of the question. Now throughout the year, I've had depreciation as well. In order to calculate that, I'm going to find my depreciation figure throughout the year. This is the value at the end of the year, but throughout the year, my buildings are worth 680,000. 680,000 is the figure that I'm going to use for the depreciation calculation. Multiply that by 2% and I have 13,600. It's an admin expense, it's depreciation for the year. So that's the total depreciation that I had in buildings. Now I revalued the buildings at the end, so I'm going to take that out here, revaluation reserve. And all I'm left to do now is I have increase in value for buildings. I've wiped the depreciation, so I'm going to show both of those in a revaluation account here, revaluation reserve account. And at the end, I have a total increase in, because of my revaluation, of 218,600, and that is a finance by figure. Note number 8, so our third last note here, we are told a story that we received a check in respect of a debt that was previously written off. So the debt was previously written off as a bad debt. Now the first thing is, don't skip this out, it's nice and easy. You received a check for 700, no entry was made in the books. So if you receive a check for 700, your bank balance goes up 700. So my bank balance at the beginning of the year, I had an overdraft, a liability here of 70,300. So I'm going to show that here on the same side. There we go. Now I've received 700, so I'm going to increase my bank account on the debit side. So at the end of the year, I have a liability, again, an overdraft of 69,600. So I've received this 700 in respect of a debtor who was previously written off as bad. That means there's somebody that previously owed me this money, 1,200. I didn't think they were going to pay, so I took it out of the accounts. But now I'm told that they're paying me, and they have paid me, and they'll pay the remainder within a month. So in other words, I need to bring this 1,200 back in to my debtors because I'd previously taken it out when I assumed that they were going to be a bad debt. So this is the debtors balance. Again, if we just look at the debtors here, it tells us 70,500. And I know that there's 1,200 that I need to bring back in because I've recovered this debt. The debt's recovered, it's an income figure, it's an operating income figure, 1,200. Now that's an additional amount that they're going to owe me. So this is the total that they'd owe me, but they pay me 700. So I'll take that out because that's been paid. So at the end of the year, the debtors still owe me 71,000. So that's that dealt with there. So the second last note here is going to be on a goods in transit. So I bought goods, and the reason I know I bought goods is because I have an invoice. I received an invoice, which means that I am being charged for goods that I bought. I received an invoice, but no record was made of these goods. So these goods haven't arrived yet into my warehouse. They're on the way, but I've purchased them. I haven't paid for them, but I purchased them. So how would you show if we had a credit purchase on credit? You need to show how we would show that in the accounts. So they tell us the selling price is 16,000. Now we've only just bought them, we haven't sold them. So the selling price here is irrelevant. So the selling price's cost was 20%, 25%. So I'm going to need to find the cost price. And to find that, I'm going to divide the selling price by 125, multiply by 100, and that is my cost price. That's how much I paid for them. Now I paid for stock, it hasn't arrived yet, which means it wasn't in the warehouse when we were calculating our closing stock. But I do own it, so I need to add it on. And my closing stock figure, we had dealt with this already, this first line we had dealt with in note number 1. Up there at the top. So that's my 76,500 that we had at the beginning of the year, and I'm going to add on 12,800. This was already there for the damaged stock. I'm going to add on the 12,800 because this is additional stock. It's going to increase the value of my stock. So at the end of the year, I can balance my accounts and I have closing stock of 87,800. Now I bought this stock, which means I'm going to have to increase the amount of stock I own. increase my purchases, but I also owe this money as well. I owe it to the creditor. And I purchased the stock. Again, this was the selling price. We found the cost price, and I owe this to my creditor because I received an invoice. It doesn't say anything about me paying them. So we've dealt with some things in creditor already. We had dealt with when we sold the office equipment to pay off the debt, 7,600. We took that out. So this is my transaction for this note. I bought a good, and I bought it on credit, which means I owe the money to the creditor. So let's increase the amount we owe the creditors by 12,800, and that's that dealt with there. At the end of the year, once I balance my creditors accounts, there's 83,200 that I owe. Now, again, I'm going to increase my stock when I buy a good, increase the amount I owe the creditor because I haven't paid them, but yet at the end of the day I made a purchase, so I owe this money. So I've increased the amount that I purchased throughout the year. We've dealt with the first two when we had our balance and we took out the van that was incorrectly entered. Now I've made another purchase, so let's add the purchases here on the debit side at 12,800. One more note to go, and the last note there includes purchases again, because M.Mullen took from goods during the year and this wasn't recorded. So if I take away from stock at the very end of the year, the 31st of the 12th, then I'll change my closing stock, because at that point my closing stock would have been calculated. However, if I take from stock during the year, it's purchases that I change, because we haven't yet calculated how much my closing stock would be. So how much did I take? Well, the goods had a retail value, which is how much you'll sell them for. Now I haven't sold them, so I don't want to look at this figure, but the selling price would be 4,800, which is cost was 20%. So I'm going to find how much the cost price would be, just like the last time. 4,800, I'm going to divide it by 120%, multiply by 100, gives me 4,000 euro. Now I took these goods, so again I took them during the year, so they're going to come out of purchases, reduce my purchases by 4,000, because this is not purchase of stock for resale. This stock is not going to be sold, it's been used for private purposes. So let's take the 4,000 out. At the end now I can balance P&L, and this is going to be my trading figure of 515,300. Now I've taken something out, I've going to increase the amount of drawings I have. So my question starts with drawings figure here, bottom of 15,600, and I've made more drawings. So let's add another 4,000 onto that. Finish with a drawings figure of 19,600. I'm going to quickly show the trading profit and loss sales figure as is, and the opening stock figure were given. This is my purchases figure. I add that on and take away my closing stock, and I'm going to be left, once I take away my cost of sales, I'm left with a gross profit of 298,500. I have a list of expenses. I need to show them under admin and selling and distribution. Everything to do with selling and distributing goes here, but the general expenses that you'll have are under administration. I would have calculated depreciations already, and I would have highlighted that they would have been an admin expense. This is my paid and amortized, my insurance figure. The rent figure I haven't looked at yet, so you're going to have to find this in the question. So there's additional expenses here, and if you look through the question, the first column is assets and expenses. So if I look through this here, I'll find a lot of the ones at the top are assets. These are all assets here. Now purchases has already been dealt with up top. I have commission, we'll look at that later on. But this here hasn't been dealt with yet, and it's an admin expense. So I'm going to add in 10,400 here for rent. Salaries as well, I would have previously not dealt with salaries, so that's another admin expense. So let's add that in as well. A total admin expense of 205,700. Selling and distribution, I would have sold a van and calculated the loss on the van and the depreciation of the van. But commission is here as well. It's on the debit side, so it's either an asset or an expense. And in this case, it's commission that I owe to my workers. It's an expense for the year, so 16,500 euro, and it's to do with selling. So that's going to go in here. Total selling and distribution is 40,900. They're both expenses, so let's add them up. And if I add those up, then it gives me a total expense of 246,600. That was my gross profit. If I take away the expenses, it leaves me with a gross profit after expenses of 51,900. After that, I'm going to add on my income figures. Now, there was a few income figures that we've dealt with. Two of these were part of the operations of the business. Bad debt recovered, we had dealt with that for the debtor note. And discount, we've dealt with that one as well when we sold the office equipment and received a discount. So both of those figures are income figures. And you'll see that the discount figure, again, income and liability are on the credit side. Most of these are liabilities, however, there is discount here, which is an income figure. It's again because it's on the credit side, it's discount received. And I've dealt with that figure, I've changed it, so that's the figure from my notes. Total income, operating income is 5,500, add that on. And I'm left with an operating profit, which I can add in here just to highlight what that is. It's operating profit of 57,400. Now, a few things happened, part of income and expenses that are not due to the operation of the business, so let's deal with these at the bottom. I'm going to add on the investment income from my investment note, and I take away the mortgage interest, so I'm left with a net profit at the end of the year of 50,600. Let's look at the balance sheet. This is my balance sheet now. I have the structure in place. My patents for the year is 56,000 when I take out the patent amortized. I have my buildings, vehicles, and equipment. So costs, these are my depreciations I got on for my notes, and this is my net book value once I take away the depreciation. I'm going to add in these 4 here for the net book value figure, just to keep everything nice and tidy. I've done 3 columns. So these 4 figures here add up here, and I'm going to add on my final fixed asset, which is my financial fixed asset of investments. Again, given in the question, 200,000. They're all the fixed assets dealt with. The current assets, this is my closing stock, I've dealt with that in my notes. 71,000 is my debtors. Now, we haven't dealt with provision from bad debt yet here, but we can see it's here on the credit side as it's a liability. It's the amount that I expect won't be paid from my debtors. So because it's to do with debtors, I'm going to offset it from debtors and take it away rather than put it into the current liabilities. The creditor is falling due within 1 year. So I'm going to take that away here. This is my subtotal for debtors. I've dealt with my investment income, I've dealt with my VAT. They're both debit. Balance brought down, so both current assets. Total current assets 161,700. Total creditors, I've dealt with my creditors note, I've dealt with bank, I have dealt with mortgage interest and PAYE, PRSI, and if I add all those up, it gives me a total balance here of 182,500. So 182,500 is my balance there. After that, then I'm going to have a working capital figure, which is going to be these 2 figures here. My current asset figure minus my creditors falling due within 1 year. My working capital figure is going to be a minus figure of 20,800, and I have net assets of 1,131,500. In the finance by section here at the bottom, my total mortgage is 180,000. That is the creditors falling due within 1 year. After that, then I have capital and reserves. These are some of the financing of the company. My capital figure is given in the question. It will be on the credit side towards the bottom, as usual, 701,900. So that's there at the bottom there. And I'm going to have a revaluation reserve that I've done on my notes of 218,600. I have my net profit figure, so revaluation reserve is on my notes. My net profit figure, which I've just completed already, and I add that on as well. And I've done my drawings. I'm going to take that figure away. You see total capital reserves of 951,500. Add that to my mortgage, and I balance both sides. So that is the sole trader from 2017 M.Mullen question. Thanks for listening.